in the past, if you see $800 billion wiped out of the market cap, that's like 50% of the market. That's kind of like a testament to how crypto is becoming, a more mature asset class. Real estate is very tangible. You can touch it, you can live in it. Bitcoin, obviously digital. One thing that people often forget to look at is they're both alternative assets. It's very difficult for me to carry 20 kilos of gold cross borders, but with Bitcoin, you can send it within milliseconds. People set up SMSF in the first place, not to invest in the traditional stocks or bonds. They set up SMSF to invest in alternative assets, including property and Bitcoin.
So we're sitting here with Ting, the CEO and co-founder of Coinstash. Great to be with you today, Ting. Why don't you give us a little background about Coinstash, what Coinstash do, and who your, I guess, typical client and audience are?
Yeah, definitely. Thanks for having me, by the way. My name is Ting, and me and my business partner, Mina, we co-founded Coinstash back in 2017. So about exactly 8 years ago now. So it's been a bit of a journey for us, not just starting the company, but also in the crypto space. I think I started investing seriously in crypto back in 2015, and my co-founder back in 2013. So he's very early. So throughout our, journey, we've been through a few cycles. But long story short, Coinstash initially we built it to be just a user-friendly cryptocurrency exchange based in Australia. But now we evolved the business more into what I would call a crypto investment platform. So what I mean by that is we want to make it very easy for everyday Australians, especially what I call the mass affluent Australians, to have easy access to cryptocurrencies.
Yeah, wow. So 2017, we're now about to roll into 2026. So I bet with, it's only 8 years, coming up 9. However, in the space of crypto, you could probably live a lifetime in 8 or 9 years. I bet you've seen some highs and lows of the industry during that time.
Yeah, absolutely. I mean, even just on the weekend, I assume you have seen there's a lot of actions happening in the cryptocurrency industry. I think about $19 billion got liquidated over the weekend, which is a record high, and $800 billion got wiped out of the market cap. And then on Monday we saw like a straight rebound, right?
Yeah,
so that's just like a snapshot of what's been happening in the cryptocurrency industry. Not always, but from time to time in the past 8 or so years. But yeah, we've definitely been through a few cycles. The previous cycle, obviously, we've seen the 2020, 2021 bull run, and then followed by the FTX collapse. And then we recently, ever since Trump got into position, we've seen another crypto bull run.
Yeah,
so
massive. Mm-hmm. Yep. And the 19 billion of liquidation was quite interesting because although it is, the biggest dollar amount of liquidations, the actual pullback wasn't that significant. Like previous bull runs, we've had multiple pullbacks of, 38%, I think 3 or 4 times in the 2020 bull market and 21 bull market. But percentage wise, it wasn't even that large of a pullback, was it?
Yeah, absolutely. So I think that's kind of like a testament to how crypto is becoming, a more mature asset class overall.
Yeah.
I mean, in the past, if you see $800 billion wiped out of the market cap, that's like 50% of the market. But like as you correctly pointed out, I think at a maximum probably saw like a 10% or like a sub 10% drawback on most of the major coins. And then a lot of that have obviously, like I said, on Monday has rebounded quite sharply. So I think what that underpins is, although there is there's many, macro specific factors that pointed towards the liquidation within the crypto market, but the backdrop, the investor confidence is still quite there. Like the institutional investors, they still have a lot of confidence in crypto to support the price level that we're currently at.
Yeah, so stripping this back and sort of becoming more localized to Australia, I guess. For those that don't know, I'm a real estate buyer's agent. I've been investing in real estate for 20 plus years, and it was my first asset class and it'll always be my favorite. I do flirt with other asset classes, I guess. But in Australia, real estate underpins Australia's wealth, or certainly up until more recent times, historically it has. What similarities does Bitcoin or crypto offer to the general Australian public?
Yeah, so I think if you look at real estate and if you look at Bitcoin and cryptocurrency as a whole, people the first reaction is people think they're very different, right?
Mm.
Real estate is very tangible. You can touch it, you can live in it. Bitcoin, obviously digital. I think if you read Satoshi's white paper, it's basically the fundamental is a peer-to-peer cash payment system, right? Digital cash payment system. But I think one thing that people often forget to look at is they're both alternative assets. So as mainstream as property is, that is still considered an alternative investment class
Mm.
because the more traditional investments are the stocks, the bonds, and like managed funds. So I think in that
Essentially, inside the financial system is the traditional ones, and then property sits outside that financial system.
exactly right. So I think what that implies, it gives people, I guess, other options outside of the traditional financial system. And in many ways, I think real estate and crypto, obviously, they are still affected by the broader, I guess, macroeconomics, but there are some very unique characteristics that underpins both crypto and real estate.
Let's dig into some of those characteristics. So I'm going to put it out there, but a hedge against inflation, or the hedge against the debasement, and more recently it's been referred to as the debasement trade.
Mhm.
So just talk the audience through that debasement trade or that hedge position of real estate and Bitcoin or the crypto market.
Yeah. So if you, I guess for those of you us who followed kind of the crypto, I guess, key opinion leaders like Michael Saylor, you would have heard of an opinion that the common thematic these days is not to it doesn't depend on which asset class you invest in, but it's more to short fiat, right? So I think that comes back to your debasement theory, which is if the hypothesis is correct that the government is just going to keep printing more and more money to facilitate their spending or to keep their, I guess, repay the interest on their debt, what that means is there's just going to be an oversupply of fiat currencies. So what that means is that's basically the very definition of inflation, right? Too much money chasing too little goods.
Mm.
So what cryptocurrency and real estate, I think it does to, I guess, everyday Australians is to provide a easy way for people to access a inflation hedge. So take property, for example. I know obviously this is your forte, but property has some unique characteristics, right? So firstly, it typically in Australia, I think in the past 5 years, property has done on average 40% returns over the past 5 years, give or take. So so that is a inflation hedge in itself. I think if you look at inflation, maybe the official CPI is 2.5% per annum, but we all know how
Well,
true.
that's a bit higher than that. In if you include, what is it, High Street?
That's right, yeah. So and in addition to that, property also gives people a rental income, right? So I think so property is a very unique asset class in that regard. But when it comes to Bitcoin, obviously Bitcoin is still a very, I would call it, adolescent asset class.
Mm-hmm.
So the returns has been, I think, in the past 5 years, depending on which month you measure it from, it's about 60% per annum, and that's compounded. So that's obviously very high returns, but at times we also saw 70% drawback, right?
Or just large events like we were discussing about the weekend with the liquidation cascade that occurred.
Yeah, and so yeah, I think both property and Bitcoin, I guess, as we've seen, the historical performances have in many ways proven that this is a basically a hedge against currency debasement.
Mm. Well, one, when it comes to property, like I like to, like as I mentioned, I follow other asset classes, but I like to pull examples, especially when it comes to that debasement of fiat currency, and use it to explain to property investors. If we look at the average house price, say we got this table here, and we get the average house price in 1970 in Australia, it was like, I think $12,500, and we put the title on this table. We then take $12,000 worth of cash, like hard cash, that people say cash is king, and put it on the table.
Mhm.
And then we take 6 kilos of gold. It was around $2,000 in 1970 for a kilo of gold, and we put it on the table. Fast forward to 2020, median house price in Australia was 750 odd thousand. A kilo of gold was 125, so the 6 kilos is very closely represented to that 750,000. But the $12,000 is cash still sitting there. So when we look at that, I guess the cash isn't king. Cash is king when it's a medium of exchange. It's easy to, but cash is trash when it comes to a store of value or that hedge position that we were just discussing. And if we could go back and we'll buy 10 or 15 houses in 1970, we probably wouldn't pay them all off today because the fiat currency has lost its purchasing power.
Yeah, and I think that's the challenge of many Australians, especially I guess the younger generation, right? So obviously the one of the hotly discussed topic is how unaffordable property has become. So if
Mm.
you look at, I guess even the recent measures by the government, you can put down 5% deposit, but there's a lot of I guess discussions on Twitter or X that people are saying, oh look, the median house price in Sydney is $1.6 million. So if you put down 5% deposit, you still have to borrow what $1.5 million. So that's not a small repayment on a monthly basis. So you need probably two people that's on $250,000
Mm.
to
Mm.
support that repayment in itself. So yeah, it's obviously very challenging times for people who are still making a moderate income and people who are trying very hard, and these are very hardworking Australians trying very hard to keep up with the pace of inflation.
Yeah, yeah. So circling back to, I guess, Bitcoin as an asset class now, there's two sides to Bitcoin and where it sits today, being it is a very new asset class in the scheme of financial markets. There's the hedge or debasement protection side of it, and then there's also the adoption as a potential global reserve asset. Just talk us through. Let's start with the hedge position. Of what gold represents and of what Bitcoin represents and the characteristics of it as that hedge, and then after that we'll circle into the global reserve because I think that's a good segue.
Yeah, so I think when Bitcoin was first invented, it wasn't intended to be what do you call it, it wasn't intended to be a store of wealth, right? So if you look at the Bitcoin white paper, it's actually intended to be a peer-to-peer digital cash payment system. But I think just given how everything has evolved, and I think this is kind of like the perfect storm. So the way I look at Bitcoin is almost like I look at Bitcoin as its own startup. So for a startup to succeed, not only do you need to have good execution, you need very sound products, but you also need all the timing needs to happen at the right time. So Bitcoin got I guess, conceived in the era of the global financial crisis. And then fast forward to 2020, 2019, 2020 is when the COVID happened. And then, as we know, as a result of that, there's a lot of money printing that's happening as COVID was happening. So Bitcoin really stood out as an asset class during that unique, I guess, time frame, because people's faith in the government basically keeping the value of their currency has been
Mm.
diminishing over time. Whereas, so a lot of and I'm not just talking about retail users, there's also a lot of institutions looking at, okay, where should I invest my money now? So that comes back to your store of value argument, right? So if you look at what's available right now as of today, you have the stocks looks very expensive, the bond market looks very overpriced, and there's many, I guess, characteristics to the bond market.
And
So
there's an argument the bond market's not keeping up with the true rate of inflation as well.
that's right, right? So it's almost like a lose-lose situation. And then so where can the money go, right?
Mm.
So the answer is really property, gold, or Bitcoin. So
Yep.
that's basically where I'm observing where the investors are flocking their wealth
Yeah,
into.
yeah.
Yep.
And if we look at gold as an example and we go back over 5,000 years of monetary policy, so obviously you and I understand this, but I'm not sure so much about some of the audience, but um, gold is true money with 5,000 years of monetary history. And then fiat currency that many people refer to as money is essentially dollars in the bank or fiat currency, but it's certainly not money.
Mhm.
Money has characteristics like a store of value, a unit of exchange, so I can change my goods and services for yours, and then a unit of account, so I can dial up from a $15,000 product to a $5,000 product or a $10,000 product. Where fiat and the store of value is that one we've already touched on, but where fiat currency really struggles is that store of value, and that's where we can, I guess, transition into the second side of Bitcoin is the global reserve and fulfilling that store of value. Just talk us through the store of value piece and what Bitcoin offers, and then I guess the similarities with the gold market.
Yeah, so I guess there's actually a very good book on this, which is called the Bitcoin Standard. So if the audience hasn't read it, I highly recommend that book. But what that book mostly touches on is less about Bitcoin, although the title is Bitcoin Standard. It's less about Bitcoin, but it's more about the nature of money, right? So basically, we've looked at the past, I don't know, 5,000 years. We went from a bartering system to relying on precious metals the Bretton Woods and then to the US dollars, eventually depegging from the gold standard. So as soon as that happened, I mean, when you talk about global reserve currency, at the moment we all know it's the US dollars, right? Before that is the British pounds. Before that, there's other currencies. But roughly speaking, give or take, every global reserve currency has about 400 years worth of almost like the lifetime. And in the recent years, we've seen, I guess, from a, I guess, geopolitical or macroeconomics level, that the US dollars is slowly losing its, I guess, slowly losing its status amongst. It's still the obviously the very dominant currency in terms of facilitating international trade.
I
But
believe they call it the US dollar's the cleanest dirty shirt in the laundry.
exactly right, exactly right. So on one hand we have the weakening of the US dollars. So on the other hand, there's obviously the BRIC countries are looking for, okay, can we build our own almost like international monetary system? But obviously that is still has its own challenges. So
Yeah.
currently people are out of options, right? So Bitcoin and gold became, I guess, the obvious choices. Gold has been around for 5,000 years. Recently, we obviously also a massive rally in gold prices. Bitcoin has only been around for 15 years. But if you use my analogy, if you see Bitcoin as a startup, the beauty of Bitcoin is every additional user you add to the network, you make the network more valuable. So the way I see Bitcoin is although it's only been 15 years, it's nearly had a flawless history of operating in the past 15 years. So as a startup, as we can see, is almost as it's more valuable than Meta. But the way I see it is its business model is almost has some analogy to that of Facebook, whereas every additional user you add to the Bitcoin network, it makes the network more secure and also more valuable. That's what's important.
I'm not sure where, I'd imagine there's a varying degree of knowledge amongst the audience, but talking about that Bitcoin and the network effect, obviously Metcalfe's law measures the strength of a network through, I think it's the number of users plugged into the network, the number of transactions on the network. So just talk us through, I guess some of the benefits that the Bitcoin network would have over as a store of value and a minimum exchange and a reserve currency over like the traditional gold and US dollar.
Yeah, so obviously Bitcoin has its unique advantages. I think one of which is it doesn't rely on any financial intermediary. So as we all know, Bitcoin has 21 million whole Bitcoin. Obviously, that can be subdivided into more satoshis. But given the nature of its limited supply, we know that the existence of Bitcoin is already predefined. Whereas if you look at the US dollar, on one hand, it is I guess it is almost like a strongest form of a weak currency where it can be printed.
Yeah.
It can be the US Treasury can use a mix of monetary and fiscal policies to increase the monetary supply arbitrarily, right? So Bitcoin has that benefit of having limited supply, but also compared to gold, Bitcoin is obviously very entirely digital. So it's very difficult for me to carry 20 kilos of gold cross borders, but with Bitcoin you can send it within a millisecond.
The logistical operation required to transfer $50 billion worth of precious metals or gold from Australia to the United Kingdom. If we talk through that, there's a ship involved, there's many shipping containers, there's a lot of security guards, there's some cranes and ports, and the logistical operation as well as the expense. How much would it cost to transfer the equivalent value over the Bitcoin network from Australia to the United Kingdom?
I think the last time I looked at it, it's less than $1, right? So
Wow.
so it's very cost effective, and I think and it's also irreversible. So you don't have to worry about, I guess, all the risks and all the added costs such as insurance.
And going back to that, the Bitcoin white paper, that can also be peer to peer. So it's over the network where if we are both, one's in the UK and one's in Australia, I can literally send it to you, not through intermediary banks and stuff like that.
Exactly. So I guess a lot of people who are on the Coinstash platform, I think initially they thought, okay, Bitcoin is going to be something that's complex because it's all digital. You can't really feel it. But in my view, it's actually a very simple form of investment, right? So you get in, you basically make a purchase, you hold on to it, and then you decide when you want to sell it. Whereas, there's a lot of other, I guess, complexities when you are holding other like the traditional financial assets.
Yeah,
Mhm.
cool.
Yeah.
So let's bring like Coinstash and localized Australian investing with Bitcoin and the crypto markets, and just talk us through what you're seeing sort of localized in Australia with your typical clients. I know that many would have a self-managed super fund. There'd be corporate investors as well as individual investors. Just talk us through, I guess, the Coinstash and Australian crypto marketplace.
Yeah, so obviously we are a platform that's basically entirely based in Australia. We are led by Australian founders, and our team is entirely most of our team is based in Brisbane, with a few in Sydney and Melbourne. So first and foremost, Australian business, and I think that really plays well with the Australian audience because we understand what Australian investors are looking for. So in my view, there's basically three parts of the investment journey. There's the before investing, there's the during investing, and there's the after investing. So what I mean by that is a lot of our investors, they come to us before they even start purchasing. They want to set up like you said, a company account, a family trust account, an individual account, also an SMSF account. So that's four accounts, right? And if unless you're an Australian business, you don't know the intricacies of what documents you require to have those accounts fully operational. So we have a very local um, um, team based in Brisbane who's going to help and account manage these customers set up all of their accounts in one go in a seamless manner. And when it comes to the during process, we actually offer the widest range of cryptocurrencies there is. So I think we have close to 1,000 coins, and the next competitor in Australia, they probably have about half that, like just under
Wow.
500.
Yeah.
So the benefit of that is twofold, right? One is it gives you a wider investment universe. Just in case you got sick and tired of Bitcoin. I know how much can you love Bitcoin, but just in case you want to diverge away from that, there's the options are there. And secondly is it stops you of needing to go to other exchanges, because we all know if you are using 4 or 5 different exchanges, like many of us did back in 2017, 2018, when it comes to tax and accounting time, that's a nightmare. And lastly, during the after investment process, we basically get audited as a company, and our clients, if you have an SMSF with us, your end of year account balances also get audited.
Yep.
So what that means is we produce the best in class, let's call it end of year reports that your auditors can just have a look and sign off on. So very seamless end to end process.
Yeah, okay. And if we look at, I guess, again, with real estate underpinning Australia's wealth, if we just take a broad snapshot of Australian real estate at the moment, 2/3 of every property is an own occupier. And generally what I'm finding is 1/3 is your unencumbered property that's like downsizers, retirees, or late in their working careers. We then have 1/3 that are mortgage holders, or they're builders, young families, accumulators and stuff. And then 1/3 are essentially investment properties. Where does so broadly speaking, 66% of Australians own some form of real estate, whether that's just one or multiple. Where does the crypto market and Bitcoin sit in similar sort of measures?
Yeah, that's a very good question. So just to answer your question directly, my understanding is there's roughly about 30% of Australians that currently hold crypto, but the awareness within Australia is actually 95%. So most Australians have actually heard of cryptocurrencies either through their favorite rugby team or through other shapes or form, right? But the answer is there's about 30% of Australian adults that currently hold cryptocurrency.
Some sort of exposure somewhere.
That's right. That's right. So it's not I guess if you think about it, 30%, that's not an insignificant amount of the population that has some exposure in some shape or form.
Yeah. Okay. And where do you see that exposure going? Like, I have my views, especially as I follow the global macro environment as well as the US market. So I have my views of where that 35% might be going if current holdings or exposure is 35, but awareness is at 95. Where would you say it's trending, and over what sort of period and time frame?
Yeah, so I would say in the next 3 to 5 years, I would like to see this number goes close to 50% mark.
Yep.
And the reason I say that is cryptocurrency is not just becoming more mainstream, it's also becoming more accessible.
Yep.
So if you look at back in 2017, 2018, the only way I can buy crypto is probably on exchange, right? Now, obviously, I prefer everyone to come to Coinstash, but even if you don't have the means or you don't have the time to set up an account with us, you can also go to your wealth manager and they might get you some exposure either through us or through some other ETFs that's currently available on the market. So the accessibility to cryptocurrency has significantly increased
Yeah.
for Australians.
And you touched on a really good point that I just want to talk through if we can. The ETF, so they're quite evolving rapidly in the US, but also there are some in Australia.
Yep.
So there's the very real possibility that the 34% of current Australians with exposure and the gap I feel will between the 95% that are aware will close, and as in the 34 is going to catch up to the 95 over many years. But there's a very real scenario where many people have exposure to Bitcoin and the crypto market without being aware through super funds then holding some of these ETFs. Would you agree that that's the direction that we'll go?
Yeah, absolutely. So if you think about it, especially in Australia, because I do talk to a lot of, I guess, people in the traditional finance space, I think we're still relatively early when it comes to TradFi and crypto, although there's a lot of, I guess, news headlines about Morgan Stanley has made a move, JP Morgan has made a move. But when it comes to the actual execution on the ground, I think the TradFi is still, in Australia, is still lagging behind what we are seeing on the international stage. But provided we, I guess, iron out a few complexities, such as, for example, insurance, then I would imagine cryptocurrency one day will become in a way almost like a not prescribed but pre-approved asset class, right? In the eyes of, say, financial planners or wealth managers. So that way, then it becomes very easy for Australians to get access, and also in some cases having access to crypto even without even knowing about it.
Mm-hmm. And I feel like we can segue into real estate here and the similarities and stuff. But I feel my knowledge and of specifically Bitcoin, not so much other cryptocurrencies, that it's almost evolving as it becomes that global reserve pristine capital where with the nature of the network, and without getting into the technicalities of the network and stuff, 21 million never will be any more. The stock to flow is pristine capital, and the world will evolve to understand that. And then when that occurs, as you mentioned, JP Morgan and Citibank are coming out and offering it to clients as that adoption's happening, and as that it turns from adolescent asset class to more of that global reserve and fulfills that pristine capital, where banks will then essentially, it's pristine capital, so we'll take security over that.
Yep.
And then you've got $100,000 of Bitcoin, we'll take security over that and then lend you. How far away do you feel that the lending and holding, like banks in Australia holding it as security and lending against it?
Yeah, I feel like at the end of the day, financial institutions are here to make a profit, right? So there's a very strong motivation for financial institutions such as the commercial banks to give people what they want, give their customers what they're demanding. So, and if they are a bit slow on that front, there are also already other, I guess, startups that's providing, I guess, similar services. So in my view, it may take another, I always use the 3 to 5 years because I think that's a reasonable medium-term horizon. But I wouldn't be surprised if some of the, I guess, the major banks come and say, look, you can start borrowing against your cryptocurrency holdings because we value it as a, like you said, pristine capital, or a very mature asset class that's mature enough. And also bear in mind, unlike traditional properties, because obviously banks, their bread and butter is to lend against real estate, cryptocurrency is very easy to liquidate, right? So if I'm behind on my repayments, guess what the bank can do? They can set a limit order on your crypto, and then they can liquidate it within milliseconds. So I guess in my view, in many ways, cryptocurrency assets is actually a much better and a stronger asset for the bank to lend against.
Yeah. It's interesting as well. I think like BlackRock, one of the biggest asset managers in the world, are offering Bitcoin and other ETFs and stuff, and Vanguard, who are arguably a similar size, that don't offer direct ETFs, but they offer wealth management, sort of sat on the sidelines for, I think it's coming up to 2 years, by not offering ETFs and that to clients. They're now coming around, and there's no set date by any means, but very close to where Vanguard will now start offering it. And if I come back to the local Australian market and banks and stuff, it's the banks are all about servicing the client's needs, and if they're not servicing their needs, the client goes somewhere else. So
Hmm.
I guess we're alluding to the fact that at some point, 3 to 5 years, the banks will hopefully start offering you'll park your Bitcoin next to your dollars or your fiat currency in the bank, which can be exciting times because that then segues nicely into property, I guess. As property I've mentioned is that underpins Australia's wealth. Talk us through some, I guess, strategies where property and crypto can sit side by side in a portfolio and some of the comparables of the two assets.
Yeah, definitely. So, as I said in the very beginning, so property and crypto, I consider both of them are alternative asset classes. So
Yep.
they sit outside of the traditional financial system, and because of that, they both play, in my view, a very critical role in someone's portfolio, and that portfolio can be their family trust portfolio, or it can be even their retirement savings, right? And like if you look at property, right? So properties, I earlier on I touched on that property has this unique characteristic. So it has a capital protection
Mm.
mechanism. It also has a yield generation mechanism. But if you look at Bitcoin, Bitcoin doesn't have the yield generating or not easily accessible. Um, so Bitcoin, in my view, is purely a mixture of a asset protection strategy and a growth strategy. So I think when someone looks at their portfolio, they got to balance. Okay, what exactly are my needs, right? So
Mm.
something that works for myself or something that works for you may not work for someone else that has their own unique unique circumstances. So I think first of all, I think that sets the scene, and then secondly, I think property in itself, we think property is safe, right? So property, obviously, the house is there, is sitting on that piece of land. Worst case scenario, I live in it. But I think sometimes people fail to realize that a lot of property comes with a lot of leverage. So let's take that example where now the government allows people to pay a 5% deposit on the property. If you think about it, really, you're taking a 20 to 1 leverage on
Mm.
your
Mm.
property, right? So what happens if your property value drops by, just say, 10%? You are really already in the
In the
red,
negative, yeah.
right? So I think similar things um, doesn't happen in crypto, provided you buy spot assets.
Yeah.
You can choose to allocate that 50 grand that you're going to put in property into Bitcoin if you're still, I guess, quite young and quite, I guess, early on in your career and in your investment journey.
Mm.
So I guess what I'm trying to say is each asset class has unique characteristics, but you should never overlook, I guess, the inherent risks with property and with Bitcoin, because Bitcoin traditionally is seen as risky and high growth. Property is seen as stable and I guess maybe slower growth. But when you look behind the scenes, it might not be the case anymore, right?
Yeah, yeah.
Mhm. Yeah.
So and I'm a big advocate for both asset classes, but I guess I'm a bigger advocate for knowledge and understanding the pros and cons of each asset class, so you
Hmm.
can, I guess, formulate your strategy. But let's talk through some, where or how Bitcoin or crypto can fit into a portfolio of a property investor. Let's take, a bit of a property investor. They've got 3 or 4 properties and the overall loan to value ratio might be sitting at, say, 50%. They've built a position of 4 properties over 10 or 15 years. Where and what opportunities does that person have to sort of, build into a Bitcoin or crypto position?
Yeah. So we actually have clients that are similar
Yep.
to the one that you just described. What I've seen them doing is some of them are sitting on a lot of unrealized gains, right? Obviously, given how well property has performed, especially in the past 5 years. So what they might want to choose to do is they might decide to sell one of the investment properties and try to deleverage themselves a little bit.
Yep.
And some of the investment properties that they have uh, can be a bit more, I guess, more challenging to manage. Let's just say they have one property
Yep.
that has appreciated a lot in value, but they're not sure about the tenant, or for whatever reason that is an older home and they just don't want to deal with all the headache. So what I've seen from our clients is, yeah, sometimes they deliberately choose to liquidate part of their portfolio, pay back the bank, so deleverage themselves a little bit, and then I'm not saying investing all of that into Bitcoin, but
Yep.
invest a certain percentage of that into cryptocurrencies.
Mm.
So that's something I've seen some clients doing. We also have some clients who have a bigger portfolio than the one that you
Yep.
described. They may take some of their rental income and then put that
Dollar cost
towards.
average into Bitcoin.
Exactly.
Yep.
So yeah, so I guess what I'm trying to say is, although I guess obviously Ken, you work in the property sector, I myself, or I also obviously love the nature of property because I think it's a very unique asset class. But it doesn't have to be the either or, right? It can be, you can have both, and then you can have both in a very, I guess, high intention way, such that you know how to manage
Mm.
your allocation to
Mm.
each. Mhm.
And I think there's also the opportunity, like you mentioned, the person with 4 properties, or it could be someone with a larger property portfolio. You don't necessarily have to sell to then reduce debt and put some into crypto. There's also, depending on, the overall financial position of the investor, that being currently in Australia, property is that pristine capital or pristine security that the banks can take.
Mhm.
And if you are sitting at 50% LVR, there's always that, depending on rents, employment, assets, liabilities, everything needs to be considered, and it's up to the investor to make that assessment. But pull out 10 or 20% of equity in that property portfolio to then move into, you know, Bitcoin that might have that higher CAGR or compound annual growth rate that might outperform that if they've got 10, 15 years in work till retirement,
Mhm.
if the CAGR on the Bitcoin of that small 10 or 20% position that they take against, obviously they need to service the loan of releasing that equity, that CAGR of Bitcoin can essentially potentially pay off the property portfolio entirely.
That's correct. Yeah, and I think we kind of touched on this a bit earlier as well. And I think a lot of the reason that a lot of like younger investors are very bullish on Bitcoin is because their equity is not enough to, I guess,
Mm,
own a property, or like especially a house in Australia outright, right?
yeah.
So what they do is they may decide to park that capital into Bitcoin for now, and just in case the value of their capital, I guess, like we said, with the money printing, deflates even further, and when the time is right, they can then decide to invest into property. So
Mm.
yeah, there's a lot of I guess there's a lot of, I guess, challenges, but there's also a lot of opportunities. Mhm.
That's right. And I guess going back to those grassroots of that, possibly that person that's on the sideline saving to get started in investing, there's always the other direction where you can build a position dollar cost average to Bitcoin and crypto. And when a portfolio gets to a certain size, then you can reduce some crypto market and buy a property. Like it might be the first home, or you might be a rent investor. But if you're building that crypto position, you can consider that could be a way to save and dollar cost average into something that's potentially going to perform better than fiat dollars in the bank that we know is highly exposed to debasement of the fiat currency and inflation.
Yep. And I guess what also resonates with a lot of people is that if you look at the modern portfolio theory, is like the argument is you want to diversify as
Mm.
much as you can. But I guess for a lot of investors, they have a healthy, firstly they have a healthy skepticism towards the traditional financial market, and secondly is, even if they diversify, I think that requires, are you really diversifying, right? So if you buy the SX 200, what are you buying? You're really buying the mining companies and the banks. And if you're buying the S&P 500, you're really just buying the US tech
Yep.
companies, right? So I think the unique proposition with both Bitcoin and property is that this is almost like the index. So if
Mm.
everything else fails, we can somewhat see, okay, the money will automatically uh, come back to, like you said, the pristine capital. What's the reserve currency? And that is Bitcoin, right? And I think property in a certain way, that's almost become, it's the Australian dream to own a house, right? So that's why we've seen property prices perform so much, is because when there's a lack of investment options, when diversification is not true diversification, people tend to flock
Yeah.
to the default, which is
Yeah.
property. Mhm.
And it's such an interesting point. I feel like we could do a whole episode on diversification, but
Mhm.
I'm not sure if it was Warren Buffett or someone quoted that diversification is for people that don't know what they're doing,
Mhm.
and concentration is for people that do know what they're doing.
Yeah.
And I guess that's one of the takeaway messages that I like to give out of this is you have to do your own research and come up not only on the asset class and understand the pros and cons, the risks of the asset class, but how they can work together. And if you're falling into a diversifying from because you don't know what you're doing, or are you diversifying into set asset classes and chosen assets? You know, like, because just buying the S&P, as you mentioned, yes, it's diversified, but it's probably only going to perform at the market, no better. You mentioned earlier, like we're just talking about property and diversifying and asset classes and stuff. So it's probably a good opportunity to get into self-managed super funds. I don't have the stats on it in front of me, but I know it is a growing trend in Australia.
Yep.
And just talk us through sort of Coinstash and holding Bitcoin and crypto through a self-managed super fund.
Yeah. So I'll probably set the scene by, like, I guess, emphasizing on how fast growing this sector is. So in Australia, there's about $4 trillion that's in everyone super. And then out of the $4 trillion, there's about $1 trillion that's in SMSFs. There is about just over 600,000 SMSFs that's established. So if you think about it, that's, I don't know, 1 in 20, maybe 1 in
Even
10
less, yeah.
Australian households
Yeah.
own an SMSF, given every SMSF most SMSF have more than one member, right?
Yeah.
And that number is increasing by about 40,000 per year. So if you think about it, that's close to about 10% of the overall SMSF pool. So what that suggests is people are, I guess, moving away from the industry supers,
The traditional assets.
into the self-managed super. And my hypothesis is people have a healthy skepticism towards industry supers just for the reasons that we discussed previously: currency debasement, lack of transparency in the traditional financial markets, lack of true diversification, and they want to take matter into their own hands, right? So what we see people typically do with SMSFs is they either do one of the three things: they buy property, they buy gold or precious metals, and they buy cryptocurrencies. So from a Coinstash perspective, currently we have just over 1,000 SMSFs that's registered with the platform, and that has been our fastest growing, I would say, market segment within the past 12 months.
Yeah, wow, that's so interesting that it's growing so fast. And I guess there's always that opportunity for the property investor in their self-managed super fund to hold both assets, being like property and Bitcoin, crypto, or even gold through their self-managed super fund.
Yeah, that's something that's that I kind of alluded to earlier. That's becoming increasingly common. So we speak to a lot of not just direct trustees, but we also speak to a number of I guess accountants and advisors. The typical answer is almost every accountant or advisor we speak to, they say, "Oh yeah, we have some clients who are holding crypto in their SMSF portfolio." And like I said, the reason for that is people set up SMSF in the first place not to invest in the traditional stocks or bonds. They set up SMSF to invest in alternative assets, including property and Bitcoin.
And it is a highly regulated environment.
Yes.
Not that, you know, stocks, bonds, property isn't regulated by any means, but there's a very, I guess, high degree of responsibility being a trustee for a self-managed super fund. So it's not a decision to make lightly, I guess. But where can people go if they want to go down that path to, you know, build that knowledge and that education around becoming, having a self-managed super fund and running that fund?
Yeah. So we obviously the first and foremost, in my opinion, for Australian investors, they need to choose an Australian platform.
Yep.
And when I say that, I think the investors also need to distinguish between an Australian platform that's based in Australia and founded in Australia, between apart from the ones that have a Australian presence, have an Australian branch, but ultimately they are answerable to a international head office. So Coinstash, obviously, we are a Australian platform led by Australian founders and based in Brisbane. So that just sets the scene. But I think something that's also very important for I guess SMSF trustees to look at is what are some of the systems and controls that the platform of their choosing have in place. So we have, as I mentioned earlier, we as a company gets audited on an annual basis by Hall Chadwick in Melbourne. We also get our clients' end of year financial balances audited. So our auditors give an opinion such that their balances are not materially misstated. So I think those assurances is another set of guardrails for people's, I guess, retirement savings, because obviously we all know how important that is.
And I just want to jump in and say how critical that is, like for anyone that's been around the industry for long enough. Like obviously the FTX event back in, was it 21 or 22 that occurred? Like having the external audit is just critical when it is, a self-managed super fund. So I can't understand how important that is, and it's so positive to hear.
Yep. Yeah. So I think yeah, there's obviously a lot of complexity and challenges within when you combine crypto, which is I guess is an up and coming asset class, and also SMSFs.
Yeah.
So when you combine the two, I think people needs to be very conscious about what they're doing, and I guess the first step is to choose a trusted Australian partner.
And property is no different, is it? Like, I'm not sure about yourself if you've got property in a self-managed super fund, but
Mhm.
when there's a whole new set of rules, like even strategy changes. You
Yes.
can't just release equity against the property that's held in a self-managed super fund. They're a
Mhm.
standalone asset. Lending's different, so there's it can be complex. But if you get the right resources, the right A team,
Yep.
the right platforms involved, it can all be broken down into manageable chunks of where your left and right of arc is, I guess, to manage that super
Yep.
fun.
That's right. Hmm.
Excellent. Well, Ting, it's been awesome speaking with you. I thoroughly enjoyed it. Any final thoughts or takeaways for the audience?
I think just stay invested. Like I said in the at the beginning, it's not about being bullish on one asset class or another, but I think people just need to be the conscious of the overall inflationary environment. So stay invested.
Yeah,
Mhm.
I couldn't agree more. And I think I've harped on a bit about the key takeaway is self knowledge and chasing that knowledge to get educated so you can make informed decisions. If you take one point of reference as your source of truth, that becomes your truth because it's your only point of reference. But if you have 10 sources of information, 20 sources of information, your knowledge builds where you can make informed decisions. And once that knowledge builds, paying attention to that debasement trade and that loss of purchasing power and how important it is, I guess, to not have large amounts of money sitting in the bank for long periods of time where it's got high exposure
Mhm.
to the fiat currency that essentially lacks store of value properties.
Mhm. Absolutely.
Excellent.
Mhm.
Well, thanks again. It's been a pleasure.
Yeah. Likewise. Thanks for having me.